Good afternoon and welcome to Crux Investor. We're here today with Artem Volynets, the CEO of Chaarat Gold. Good afternoon.
Hello.
Thanks for joining us.
It's a pleasure.
We've been wanting to meet you for some time to try and understand a little bit more about your story. A lot of things have changed recently. Okay, I'm stuck in an elevator with you. You've got 2 minutes. Just describe the company at a helicopter level for people new to Chaarat.
It's a small, ambitious company which is growing to be one of the leading companies in gold sector in the former Soviet Union, with a top level management team and the board, and massive growth opportunities which will be executed in a very immediate future.
So you're aiming big.
If you, as people say, if you don't, people don't laugh at your ambitions, they're not ambitious enough.
Tell us a little bit about why you got into Chaarat itself. You know, it's an interesting company with an interesting history. What made you start having conversations with them?
Number one is chairman Martin Andersson, who bought in Chaarat a couple years ago, accumulated 35% and became the chairman, and started this program of change which we completed last year. I started discussions with him 2.5 years ago about the overall strategy for the consolidation of the gold sector, and we very much hit the chemistry between us. And what I also appreciate is his approach to building a proper company. He's Swedish. We are UK listed, AIM listed company. What is very important to us, and it's perhaps differentiates us from many other operators in a part world of the former Soviet Union, is that we're keen to ensure the best corporate governance standards and the best ESG, environmental, social, health and safety standards for our company, because we believe that in the 21st century, that's a way the companies will differentiate. As an example, we completed full management and the board change in Chaarat over the last 18 months. There is not a single person left in the company.
I was about to ask you about that. So why did you instigate that change? What were you trying to remove, or what were you trying to address?
What we wanted to do is start from scratch in building the new leader. The company been in existence, as you know, for 12 plus years. It's raised some money on AIM and drilled in the Kyrgyz Republic and found a wonderful ore body and a lot of ounces, but it was unable to develop those ounces into the proper producing project.
Why?
I don't know why. You should ask them.
Okay.
What we decided to do is, Martin, is convert that idea, convert that one single project into a proper company. Proper company means, first of all, a proper experienced management, which is able not only to find gold through exploration, but build and operate mines, extract operational efficiencies, ensure the best and proper ESG standards, and operate not only one mine, but several mines across several geographies, because that's the way you build a proper large company. So that's what we set out to do, and in the process we have decided that the best way is to start from the top and bring the fresh blood into the company.
But Martin stays.
Martin stays, but he joined 2 years ago. So from that point the change started. I think what is important and is very telling is in that whole process is our latest addition to the board, which is we have a new independent director joined us last week, Warren Gilman, who used to, and what is important is not only the caliber of the people that we can attract now. Warren ran for last 10 years a joint venture between Chencon Holdings in Hong Kong and CIBC, a large mining investment vehicle. So it's a very high caliber.
Finance guy or your funding guy?
He's a mining engineer by background, and he's both the mining engineer and a mining investor. But what's important and what brings what's new with his appointment is that he is a fourth independent board member. We have 3 executives on the board and 4 independents. So very unusually for AIM listed company, we have now a proper independent board with independent directors chairing all of our committees: audit, sustainability, technical, remuneration. All of that committees are chaired by the independent board members, which is the way we are setting ourselves for what we want to achieve in the future. We're building a proper company, beginning with a proper governance institutions.
So you've got people there with the governance. Tell me about the people who are actually doing things, active members who are delivering either on the exploration, development, or production side.
Exactly. So the 2 most important operational people in our management team is Bob Benbow, 40 plus years of experience running and building mines. His previous project in Turkey, Alcazar project in Turkey, where he built and ran for 10 years. What we did, we hired him and he hired his team. So we moved all of these people to the Kyrgyz Republic. Our head of technology, Dusty Nickel, also American, 46 years of experience discovering gold in all of the continents.
In similar ore bodies to the one you're
very different. You know, if you work in the industry for 40 years, you'll encounter many ore bodies.
Right.
But if you talk to Dusty, he would tell you that what we see in Tanshan Gold Belt in the Kyrgyz Republic is very similar to the gold provinces in North America that he's seen. So wealth of experience in both Bob and Dusty, and we have hired excellent operational managers in the countries of operation. Davron, our country manager for Kyrgyz Republic, used to work with Bob in Turkey. He is charged with building Tulkubash project. David Tavmasyan, who is our general director at Kapan in Armenia, used to work at Kapan many years ago. Went to work in America at one of the large American mining companies. We managed to get him back and work back in Kapan. So this combination of the local knowledge and proper international experience with large companies is something that is very, very important to deploy at the highest professional level. Our CFO is European/American, used to be CFO of New Star before, and before that with Trafigura and Merrill Lynch. So there is a really proper, very heavily experienced management team on top.
So just finishing up on the need for change. That's the theme I'm hearing here.
Right.
You've changed the company's focus. You've changed the team around this, and people should be perceiving Chaarat as a new venture.
It's a new Chaarat. It's Chaarat. Not even 2.0, it's probably 3.0 now. But the 2.0 was after we put the new team in place. Now 3.0 after the acquisition of the first producing asset we are producing now. So we are Chaarat 3.0, completely new management, completely new board, new vision, new strategy.
So that's very important for new investors coming in to recognize. It's also important for existing shareholders who may be sitting on shares for a long time looking to see what the future looks like for them. So
for the existing shareholders, I do have a message. Since Martin joined, our shares are up more than 300%. Well, I'm telling you guys, this is only the beginning.
Okay, so your report card for 2018, how do you think you did? What would you have done differently?
We did what we said to do, which is a major transformational part of first step for Chaarat. We converted the company from a developer into a producer. We looked at 5 opportunities, M&A opportunities, and we executed to complete on one. As you know, in M&A, you have to do work on several deals at the same time. As a former banker, you would probably recall that, in order to get one done. So we approached that part of our strategy in a very systematic way. We looked at 5 deals, we executed on the best one. And we done it in a way that demonstrates our value proposition. We built the first mine at 2 times EBITDA and 0.5 price to NAV. So it's a very good deal. But what's important and for us is that the value creation for us as shareholders only begins with a smart deal. And smart deal means good price, good asset, in a good structure. Good price I mentioned to you. Good asset, yes, we see interesting opportunities in Kapan. And a good structure is that we managed to buy that $100 million NPV asset for really $5 million in cash, because we didn't issue any new shares to pay for it. We raised $40 million in debt. The vendor, which is a Polymetal, large mining company, took $10 million in our convertible bond as a part of the payment. So they are now an investor, which is a good company to have in our shareholder register. 5 steps to create value, or an example of Kapan. First, smart and disciplined M&A. Second is increase the reserve base. So we bought Kapan because it is in a rich geological area, like our assets in the Kyrgyz Republic. We believe we'll be able to expand the mine life quite considerably there. So we will be adding years.
What is it at the moment?
It's about 6 years.
6,
right?
okay.
So we think we'll be able to add a few years for the next couple of years.
About what's the resource number? Just over 1 million.
We are working on we just got ownership of the asset less than 2 months ago. So we'll be making announcements on new reserve for mine life probably sometime in the middle of the second quarter. But what we see so far is very encouraging, and it's very much fits into our value proposition. That is, we'll be able to expand the geology, increase the reserve and the mine life for each of the assets we'll buy. We're not going to buy an asset where we don't see an opportunity to increase the mine life, right? So exploration is a second part and a step in the value creation. Third step is operational efficiencies. Good example, Kapan mill throughput now is 650,000 tons per year. The mill, which was built in Soviet times, could produce or process close to 1 million tons per year. So we're not saying that we're going to get there in a few months. It will take some time to get there, but we certainly see possibility of increasing the throughput to whatever number is between 650 and 1 million.
With a reasonable recovery rate.
With a good recovery rate. And now that we have this excellent operating team that I mentioned in the past, we put in that international expertise to work at Kapan. We already see things where we can debottleneck, where we can increase recoveries, where we can stabilize the operations. It's already working, which is early days. It's less than 2 months, but we see efficiencies. So operational efficiencies is the third lever in value creation on assets we buy. The fourth one is synergies. We don't have many synergies now between the Kyrgyz Republic and Armenia, other than the fact that we can send our operating guys, our geologists, our lawyers, and everybody else, business development managers, to work in both places. So today it's a small G&A primarily driven synergies. But once we have several assets in the same or close jurisdictions, we'll be able to extract procurement synergies, etc. So, and that is going to happen with our next deals. And the final kind of step to value creation is very simply reduction in the cost of capital. Once you have several operating assets on one platform traded in London, we should see a reduction in cost of capital, which will be massively beneficial to all shareholders.
Okay, that's great. Good summary. Talk to me about this year. What are the big moments for you this year for the company?
The first moment, which we just announced last week, we signed a joint venture with Chivtai, which is a mining contractor in the Kyrgyz Republic. And that is a massive, massive step forward in the development of Kyrgyz assets in 2 ways. Number one, it de-risks the first project, Tulkubash, which is a simple heap leach operation that requires $130 million to be built and produce 100,000 ounces. And need 2 construction seasons to be built. We already invested around $30 million into this project. We built access road, we built camp, etc. And now Chivtai comes in. They agreed to buy 12.5% in our Kyrgyz assets for $13.5 million. So just in broad strokes, we invested 30. Chivtai comes in, they will invest another 30 plus. The remaining 100, which is required to build the project, we now should be in a position to raise via the project finance. So that's a process we're starting now. The Chivtai agreement unlocks the start of the construction of this project.
Yeah, I'm interested because you seem quite keen on debt and you're anti-dilutionary, and I know the board is also buying a lot of shares themselves, so you're very confident what the
I'm
future
buying
looks
shares
like.
myself, yes.
I heard. So, but when you're looking at construction, debt, finance, you're AIM listed, but where are you looking for that money? In London, or are you looking in Asia?
First of all, there are some multilateral global institutions which are keen to invest and provide debt funding for the new projects in places like Kyrgyzstan. So those are very much on our radar.
Or EBRD type people, maybe?
That type of similar
Okay.
institutions,
Yeah.
yes. But they are also kind of traditional project finance banks who look
Right.
at the basic metrics. They look at the equity.
Yeah.
Now we have 60 million of equity, 30 we invested,
Yeah.
plus 30 from Chiftai,
Yeah.
and the remaining 100 can be simply, or based on the project metrics, we should be in a position to raise it through that. So what we've done this year, talking about 2019, we started that with this major milestone in the development of the first project in the Kyrgyz Republic. We should enable us to get to the first gold pour in 2021.
Okay.
So by that time, we will have our total production, including Armenia and Kyrgyz Republic, of 160, 170,000 ounces, which is also going to be a massive step for us. But also importantly, what that investment by Chiftai joint venture we signed is doing for Chaarat is crystallizing the value of Kyrgyz assets. So today, if you look at our market cap and the debt, the market cap is around 100 million pounds.
Yeah, 108, yeah.
140 million US dollars. Debt is 80 million, so total enterprise value is 220. Chiftai Investments validates the value of Kyrgyz assets at 250 million US dollars because they are buying 12.5% for 31.5 million. You do simple math, right? So this is just the Kyrgyz assets. The NPV of Kapan is at least 100 million. So we are 40-50% undervalued versus the verified value of two assets.
So again, you can work numbers in a number of ways, but if I look at your share price, it's been pretty good, pretty level for the last 12 months. Again, unusual in the market last year.
It was didn't trade for 6 months of last year.
True.
Right.
But we see the static.
But trend is good.
Trend is good. Trend is good. But if I look at the way that you're trying to build this company out, I think you've mentioned in previous pieces, you're looking at acquisitions. M&A is a big part of the way you grow going forward. You know, the Armenian asset is its producer. It's reasonable valuation, but it's not significant. What is your strategy there? What type of companies are you going for? Lots of small companies to build up a portfolio across the region, or are you going for going to hit the ball out of the park and get a big boy on board?
Number one, we're looking at producing assets.
Right.
Number two, we're looking at producing assets with a good geology and upside potential in terms of exploration and operational improvements, as I mentioned to you before. It's very simple. They're very systematic in our M&A approach. We do, based on those criteria, we look at 3 regions, which is Central Asia, that's Kyrgyz Republic, where we're already present, plus Kazakhstan, maybe Uzbekistan at some point when they start fully open. They're in the beginning of that process, because they are on the same Tian Shan gold belt. Armenia, where we are already, obviously we will look at things around where we can have synergies, which I also mentioned to you. And the third leg or third cluster is likely to be in Russia, where we see a lot of producing assets undervalued, given the perceived risk which is now applied to the Russian assets, but producing the great cash costs. So in terms of the size of the opportunities we're looking at, we have a pipeline of 12, 15 different opportunities, of which 3 are active at the moment. and we need to add 2 more in the category of active to ensure we close at least one this year. Some of them are transformational, which means they're bigger than us. Some of them are add-ons, like Kapan.
Sure.
We will be able to tell the markets what we do once we sign a term sheet with one of them. But again, the idea of doing deals at a minimal dilution to shareholders is very core to us because we're all shareholders. That's the way we think, and that's the way we evaluate opportunities.
Yeah.
Typically, you would see junior miner raising tons of money to develop the project and diluting the existing shareholders to very small numbers. For us, it's a matter of philosophy. So what we did is we instituted an incentive scheme whereby we are not getting paid any cash bonuses for those first 3 years. Instead, we're getting in shares, restricted shares and options. So no way we are going to do any diluted share issue to fund any other acquisitions. If anything, whatever we do to buy the new assets, we believe the deal has to stack up on its own and it has to be able to attract investments. Because the deal has to be good. And then we'll fund it through a combination of debt and equity. But just to give you an indication of where we think we are heading to, the management options, which is disclosed in the prospectus, is 42p per share. So it would not make sense for us to do a deal at anything below that.
Absolutely. So you mentioned a phrase earlier on, perception of geopolitical risk. Do you think you're benefiting from the fact that maybe you're going into countries where others fear to tread? I mean, Armenia is a difficult jurisdiction from most.
Armenia is a wonderful jurisdiction. The Kyrgyz Republic is a terrific jurisdiction.
Try and get funding for it if you're a UK team. I think they would argue differently.
That is true. And, for people who sit on the other side of the Hudson River and read Wall Street Journal in the morning, we're probably in a funny jurisdiction.
Yeah.
But the risk always have a return characteristic to that. We are benefiting from the fact that perceived risk, i.e. if you read some mainstream media, is higher than a real risk on the ground. And the way you mitigate the real risk on the ground is, number one, having the team with experience in this part of the world. Martin Anderson built a very successful bank in the 90s in Russia called Brunswick, sold it to UBS in a great transaction just before the financial crisis. I run some pretty large companies in this part of the world. We know how to deal in these countries. But importantly, as I mentioned already, we are coming in as a UK public company with Swedish as a main shareholder. We are fully transparent. Our key focus in OSG and proper corporate governance. And that was differentiate us, and that was enable us to access more traditional sources of capital. But we don't expect that we will have North American traditional institutional funds buying a lot of shares. Probably not. It is more specialized mining funds. It is also investors from places like Hong Kong and the Middle East who have a different perception of those geographies and who are actually pretty keen to invest in those geographies, especially for our friends from China and Hong Kong, because it's on a belt and road.
But your view is, if you produce gold, there's a spot price for gold every day. You can make money as long as you can manage the risks in country.
You can make more money than in other parts of the world, and I would argue very strongly that if Randgold traded at 8 times EBITDA, having mines in places like Congo, in my view, Kyrgyz Republic and Armenia has a very different risk profile from some parts of the African continent.
I think you'd be right. Just want to again come back to some of the questions which we may have addressed earlier, but I want a very clear, quick answer from you. You seem to be the guy driving the strategy for this business. The other board members, are they just window dressing?
We have actually a very hands-on board.
Right.
First of all, I'd start with Martin, who is executive chairman. I would not say that I'm driving the strategy. It's like a Roman Empire. We take all key decisions between two of us. We discuss and debate and we come to a consensus. And I think that's very important because it also tells you about our risk mitigation. Yeah. Right. So me and Martin are the key strategy drivers and performance drivers for the rest of the team. Then if you talk about other board members, our Chief Operating Officer, Bob Benbow, he's also a board member, and he's very much executive in the operating part, and we see that operational expertise is absolutely key to the company success, and we will be adding more people into that area, because the only way you're going to make money in this industry if you properly run mines. Right?
Yeah.
Then if you look at our other board members, Gordon Valley, he's a deputy chairman and senior independent directors. He is going next week to Kapan. He's not sitting somewhere at home. We speak with him every other day. Hussein is our head of audit committee. He used to be CFO of Antofagasta, again, very high profile board member with experience of running emerging market companies in the London market. Antofagasta is main board listed.
Sure.
Right. Rob Edwards, who also is my fellow independent director in Norilsk Nickel, the Russian mining company, by both independent directors. Massive experience in not only in the region but also in bringing the investors into the region. Again, somebody we speak on a daily or weekly basis. And Warren, which joined us last week, I mentioned to you his biography. No, it's a very much hands-on board who is interested in seeing this company succeed.
Right. And have you got the balance right, do you feel? I mean, obviously you and Martin, finance oriented. I know Martin's got an engineering background, but
Gordon is a geologist by background.
But does he have a say?
Oh yes, absolutely.
Right.
Very much so. Right. Rob and Warren are mining engineers, so they're not finance geeks.
So you've got the balance right. There may be some new faces coming through. You're very clear on creating this new look business.
We have already created it. Charat in Kyrgyz language means a spotted horse, like Andalusian, right, who runs very fast. So we try to stay true to our name and to our nature by running fast.
I love that. Okay, I want to talk about the money. You've talked about a number of debt structures. You've obviously got access to Asian market through partners and your experience, and I guess the UK market. We talked about the fact that you're in jurisdictions which may not necessarily roll off the tongue or be known to a lot of Western investors. But why do you think that shouldn't concern them? How are you going to go and raise the money that you need?
First of all, I believe if we are set to build, with a vision to build a large mining company focused on low-cost operating assets with significant cash flow potential, with a team that has a credible ability to operate in those jurisdictions, it's irrelevant whether it's Africa or Central Asia. We are not going to go into Africa, we're going only to go into the countries where we know how to operate. But importantly, if you have a proper corporate governance procedures in this company overseeing what we're doing, I believe that we can show to investors the confidence that this is a proper and transparent setup. Yes, those countries are not for the mainstream North American investors, but I do believe there is a number of mining funds in this town that would be interested in investing in those jurisdictions, like they invested in Africa again. But also, I think there is a lot of fresh capital that is coming in from Asia, Hong Kong, Singapore, etc., as well as from the
institutional or retail.
I think that is an interesting point, and we see ourselves being an inflection point, moving from a more traditional, small, not that well-known AIM company into the institutional market. So we are hiring new brokers. We announced recently appointment of ASP Angel. And the next step for us is to get ourselves known among the institutional investors. They very much like our retail base to stay with us. They will massively benefit when the institutions come in because the daily liquidity will improve, etc. But that's a kind of normal grown-up pains that every company is going.
Do you think that's true? The SP Angel, I like them a lot. Some great writers there, analysts there. Do you feel that if institutional money comes in, that you're going to get the liquidity and the volume that you need to be able to drive the share price up, or do you also need their retail base to get behind it as well?
I think you need both. You need both. I think what we'd like to do is for our retail and loyal shareholder base to understand better what new Chaarat is, but also to attract new institutional capital. That will certainly help to improve the volumes. Not right away, nobody is going to say that's going to happen tomorrow, but certainly more institutional names in the shareholder register will happen. That's already happening, to be honest.
Yeah, okay. Well, look, appreciate that. I'm going to finish off with a question for you. 5 reasons why they should buy Chaarat.
Number 1, it's a great team, great vision, and a great company that is executing very rapidly on that vision. 2, it's massively undervalued. If you just look at our existing base, we're trading at half of our NAV. 3, on top of the existing value, we are going to add massive values through our further growth through acquisitions. Number 4, we are very keen on corporate governance, as our commitment to independent boards confirms. And that is our mantra, because we believe that properly operating in this part of the world you can only do in a fully transparent manner. And then these countries will show you as example of the foreign investment.
Okay.
As an example, we co-sponsoring the Kyrgyz Investment Forum with the BRD for the 3rd year in a row. That's the way we want to be. We are the largest British investor in the Kyrgyz Republic, the 2nd largest after HSBC, British investor in Armenia. And fifth, which is not really fifth, but number 1, our main focus and what we start our management meetings with every week is a focus on ESG. Environment, social, and governance. Environment, health, safety, environment is a must. And again, I think it hopefully will eventually differentiate us from many other operators in this part of the world. I think the whole mining industry is moving into a very new era in that front. And we're a small company, but if we do this right from the beginning, our shareholders will benefit massively, whether existing or new.
And I want you to explain a 6th reason, which is around a lot of the directors are buying, which is great, but you've got a restriction on selling. Is that right?
That is true. What we did, we put together an incentive plan, which will not allow anyone who participates in that plan, which is all the top management, to sell any shares in the market for the next 2 years. Right?
2 years, okay.
On top of that, we're also buying shares from the market, which I did recently and all our directors are doing, because we believe, honestly, that the company is undervalued.
Right. Well, I think that's a great endorsement. So, I appreciate your time, Artem.
Thank you very much.
Thanks for coming in. Thank you very much for watching our video. We do aim to give you informed and intelligent information with which to make your investment decisions. So if you liked what you just saw, please give us a thumbs up. And if you want to see more insightful, in-depth, honest and unbiased interviews, then please click the subscribe button. So thanks again for watching, and we look forward to seeing you again soon.